I understood all those words. I do know a few of them. One is momentum, and it's a very common thing used in tactical investing. And the philosophy of momentum is that a stock that is going up will continue to go up. And to a point, that's true until it's not true. So there is a historical trend that when stocks go up, they tend to go up. Just like most years, the market goes up. So if you look at last year, if the market went up and you predict that this year the market's going to go up, you have an 80% chance of being right. It's magical. But when it goes down, it tends to go down a whole lot more. So that's one of the problems with these strategies. Another thing that can cause tactical real problems is they will respond in days or weeks. So if a stock is up over a week, they buy into it. And when you get a pattern like the last year, basically, where the markets run up 10 or 15% and then fallen 10 or 15% and then runs up 10 or 15% and fallen 10 or 15%. If you're a long-term investor, whatevs. It's annoying. It's frustrating. Don't look at your portfolio every day. Don't even look at it monthly. If you got to once a quarter, but really you should review it annually to see how you're doing. Otherwise, you're just going to upset yourself. But what tactical will do in those situations, when the market runs up 3 or 4 or 5%, they say this is the start of a bull run, and they rush in, and not only do they buy, but they leverage buy, and they buy more than what your money could be worth. And then it turns around and it goes down. And they go, well, shit, we just lost all this money, and now it's going down, so we've got to sell everything. So now they sell low, and then when the market goes back up again, they buy, and they end up buying high, and then they sell low, and then they buy high. You're doing exactly the opposite of what one should do in the long run. And the problem is that you're doing it all, and this is the same thing with the Motley Fool 4 thing. When you're constantly buying and selling, if you make money, even if you beat the index, which is really hard to do, you're going to pay dramatically more in taxes. We've done shows on that. You can go back to that. I'm not going to belabor that point. So this fund is the nice one because it has 5 years of data. And when I first got contacted by these guys, one of their things was that they claimed that over the last 10 years, this strategy had beaten the market. And so there was one fund that existed in 2007, and they happened to be mostly in cash when the market went down for most of late 2007 and into 2008. And they rode that horse for a decade and claimed market-beating results. But in every single year since then, they were underperforming the market every single year. So as the market went up higher and higher and higher, they did worse and worse and worse. They only beat the market in 1 year, which could have been achieved by a nice balanced portfolio without all of this taxable activity. And so the nice thing in this one here, this is the Total Tactical Management Growth Strategy. 5-year performance is 7.02%, and I think this is as of May 31st. So let's look at what the S&P 500 has done during those last 5 years. Over the last 5 years, the S&P 500 has returned an average of 12.06%. So this tactical fund, which had actual back-tested data to show you how wonderfully they beat the market in the past, theoretically, according to their model with fictional, not real data, but it's fiction. You're data mining, so it's real data, but it doesn't have value. That cannot be stressed enough. Their results, once they actually employ the model, was to return 7.02, and the market, as measured by the S&P 500, returned 12.06. So they've underperformed by 5% per year. And their growth strategy fund, which is supposed to beat the market because you're only going to be in when it goes up and you're not going to be when it goes down, it underperforms the market by 5%. It creates more tax consequences, more trades, and it's supposed to be less risky. It's more risky and it's more volatile. So tactical doesn't work. Can someone show you a set of data that shows that it might have worked backwards in time? Of course they can. So I'll just end with that. We talked about the Motley Fool, Motley 4 fund, that where you just pick 4 funds from the Dow and how that doesn't work. We talked about Total Tactical and how that doesn't work. Oh, and I did want to tell you about the overall tactical index. I found out that Morningstar has created a little index, a little collection of all the tactical funds. And so it makes the one I just talked about look fantastic, which is awesome because they can use this index to compare themselves to. But the overall tactical index, as published by Morningstar, and you can just Google Morningstar Tactical Allocation Total Returns Index, something like that, and you'll find this. If you can't, let me know. I can send you a link. But for the last 5 years, this strategy has returned 2.99%. So a strategy that, by its very self-description, relies on data that shows that their strategy beats the market and that they're going to continue to beat the market, which is just pure fantasy. Over the last 5 years, they've made 3%, and the S&P 500 has made 12%. Even in difficult times in the last year, year to date, 1 year numbers, they've lost 1.37, and the current 1 year number for the S&P 500 is 3.9% positive, 3.95% positive. That's 1 year from June 30th. So again, the market has made 4%. They've lost 1.37%. Now, you could argue that this tactical index from Morningstar includes everything, including the really, 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 really shitty ones, and it does. But as I scroll through this, I'm looking at the 5 year number just off the top of my head. I can't see a single one that has gotten anywhere close to the S&P 500 12% return. And part of the problem is, and I've said this before and I'm going to say it again, people do not underperform because the market goes down. People underperform because they don't make money when the market goes up. Often the vast majority of the returns in a given year can be shown to be just a few key days where something happens, like the couple of days after Brexit. The market went up several percentage points after the big shock of Brexit. You never know when those days are going to be in advance, so you want to be in the market, at least the part that's not in the cushion. And again, the cushion is the part that's safe and conservative. If you're close to retirement or in retirement, you want to have part of your portfolio that's not going to make as much, but it's not going to be as volatile because you might need some of that money. But for long term, 10 years, 15 years, 30 years, and virtually everybody is a long-term investor unless you know something I don't know, you're going to live longer than 10 years. Even if you're 70, the mathematics says that the odds are you're going to live more than 10 years. You are a long-term investor. You should have some, if not all of your money in the stock market. Anyway, this was supposed to be a short segment, and I ranted like crazy, so hopefully you enjoyed some of it. I'm going to take a little break here, and then we're going to go into our interview, and we'll talk to you later. This is Phil Ferguson with Polaris Financial Planning, the home of science-based investing. I see people owning really bad investments all of the time. Many advisors are paid a commission by a big company to sell you something you may not need. It's kind of like church. They create fear, then they tell you what you want to hear, and then they take your money. What you want is an advisor that is paid only by you. That is a fee-only fiduciary advisor. Remember, people work for who they are paid by. You can contact me, Phil, at PolarisFinancialPlanning.com, or listen to the cleverly titled The Phil Ferguson Show. Each show, we have an interesting investing skeptically topic and an interview with someone fighting to end religion. Polaris also gives 10% of gross revenue to support the growing secular movement. You're not just getting better investments, you're helping to change the world. Hello, everybody. This is Phil Ferguson, and of course, thank you for continuing to listen to The Phil Ferguson Show. Today, we have a delightful author whose new book is called Everybody is Wrong About God. It is Dr. James Lindsay, and he is with me now. How are you, sir?
I'm great, thank you.
So this book, Everything is Wrong. Everybody is wrong about
everybody.
Everybody. That includes me, and I got some different opinions. So can't somebody be right about God?
Well, that's almost the number one criticism. The book's been out since December. The number one criticism that I've gotten, I think,
well,
is
shit,
rather
I
ridiculous.
was hoping to be original.
What's that?
I was hoping to be original.
The number one criticism that I've gotten so far has pretty much been, well, everybody's wrong except you. like I'm some kind of
Yeah.
smart aleck. So, and we could add that everybody is wrong about God except me. Is the new working title of the book?
I like that, and like a lot of titles, I'm assuming the intent is to get the intention of the person walking by, and only they have time for the 5 letters in the title, and they go, "What is he saying?"
Yes, the attention grabbing is a major point of the title, but I actually stand by. I mean, everybody is one of these words that's sort of like the royal we. You have to kind of realize that it has some stretch on it, but more or less, everybody's been wrong about God because they treat the thing either with theology or with philosophy, and both of those are the wrong way to do it.
Well, I had a couple of listeners to my show that said that I must talk to you about this book. And they told me that you were one of your essential points here is that maybe atheists are going about it the wrong way. Is that fair?
Yes, I think so. So a lot of people say, oh, everybody's wrong about God. No, religious people are wrong about God, and atheists have it right because we don't believe that God exists. And well, if you still treat the thing like it's a philosophical object, or you still treat the thing like it's theological, instead of seeing it just as a mythological application to a bunch of psychology, then you're probably wrong about God, even if you are an atheist, even if you don't believe that such a thing exists. And so the book starts off pretty, in an attempt, I guess, that's pretty strongly trying to grab attention. And it says that I want to tell you that God exists, but not the way you think that I mean that. And so if atheists want to stand there and argue with the points or details, if there was a God, then this would have to be, and this is not what it is. And then really what I think they're doing is adding a lot of fuel to the fire, that treating the idea of God the way the religious people want to treat the idea of God is what should be done. And I don't think we really want to add fuel to that fire. So I'm not particularly keen on seeing atheism promoted in the same way that it is usually promoted or has been promoted.
So if you're defining God in, I guess if I can say this correctly, a different way, what is that way?
God is it's very complicated to say this without getting too technical, because the book is about the psychological and sociological reasons that people believe in God, and then basically makes the case that there are these reasons, the deep-seated psychological needs that people have to have met, and that God is a myth that was created and elaborated upon in order to allow people to meet those needs. If we want to get technical, God is what psychologists would call an object of attribution. If you want to understand where especially morals come from, or purpose in life, or why things work out the way they do, or why things aren't as bad as they could be, and any number of other things, and why social networks like churches have such good cohesion. If you want to attribute an explanation for how all of that stuff works, one thing that you can do is wrap it all up in a mythological being, in an entity that has the power to make it all work, and say that's how it works. That's what God is.
So God is the social connectivity that people need?
No, God is the concept that allows people to understand how there is social connectivity, and where morals come from, and why there is purpose in life. And these kind of, so-called big questions that people always want to address, with varying degrees of philosophy or tradition or whatever. So the idea of a God is an abstract idea that has been imbued with these various properties, so that people can believe that there's an explanation for those various parts of life, like morals and purpose.
Okay. And so how do we move forward in that scenario?
Well, I think I have the academician naivety. I think generally that I have the mistaken belief that if people understand what they're working with, their beliefs will change accordingly. And so my hope with the book had been just to communicate, this is what I really